from a balance sheet management perspective, what we're hearing from investors is just what's your leverage, what's your access to credit, and ultimately what's your cost of capital. And I think one trend that we're watching closely at the bank is this divergence in cost of capital between small and large caps and smaller mid caps. And so I think that's going to be prevalent as we get later into 23 and into 24.
I'm here with Steve Richford, Managing Director, Investment and Corporate Banking at BMO Capital Markets. What are investors most interested in hearing about from REITs this year?
So simultaneously, the simplest question and most complex question, I would say. Look, the reality is there's sector-specific questions that are out there. I think return to office has been maybe not well vetted, but well publicized. I think you're seeing supply issues in certain sectors like residential or storage that are on the come. But if I had to break it down for, say, 150 REITs, I would say three things. One, balance sheet management. Two, I would say the fundamentals of their existing business. And three is price discovery and sort of catalysts for value creation. So from a balance sheet management perspective, what we're hearing from investors is just what's your leverage, what's your access to credit, and ultimately what's your cost of capital. And I think one trend that we're watching closely at the bank is this divergence in cost of capital between small and large caps and smaller mid caps. And so I think that's going to be prevalent as we get later into 23 and into 24. On the fundamental side, I think there's a lot of things going into that, obviously supply demand, but if you dig a little deeper, I think the inflation around employee costs and so forth you've seen in many quarters in the last few years as the inflationary period has continued to be a trend. Obviously it's coming down a little bit or coming off tough comps, certainly stabilizing. But there's a lot of uncontrollable costs that are out there that I think investors are watching, like property taxes and certainly insurance. There's been some, I would say, really mind-blowing numbers in terms of insurance and what the premiums have gone to in 23. And so I think everybody's watching that, and I think the media has sort of portrayed it as, greedy landlords and so forth. But when you actually pick it apart and look at the costs that are being forced onto companies through some of these uncontrollable expenses, I think ultimately investors are trying to see what's on the bottom line. And I would say the last thing is M&A and price discovery. Transaction volumes are down pretty massively in most sectors, and I think it's become very tough to value equity. And so I think investors are really attaching to that. And then I think the other two things I would look at from that standpoint is it's been a little bit of public-to-public M&A, but I think there's some win-wins in certain sectors where I think investors would look at that as unlocking value creation. I think the take-private wave probably going to be muted given the cost of capital. There's a few sectors where you can still get positive leverage, but right now pretty challenging in most sectors to really push on the take-private side. But I'd say those are the three things that we're watching.
And at BMO's recent Farm to Market conference in New York, a panel examined the growth of the carbon market. What should REIT stakeholders be paying the most attention to in this area right now? Yeah,
look, on one hand, you can look at it as a big risk, and obviously there's been a ton of coverage around ESG and the environmental impacts of carbon and so forth. It's sort of ironic. We're in New York today, and I think lowest air quality in the world from some of the fires in Canada. And more recently, you've seen insurance companies pulling out of California as an example, New York pushing regulatory constraints on owners around environmental. But I would say for us, we're looking at it as an opportunity. We want to be a big part of that transition. We just acquired a 100-person firm called Radical, and their mandate or goal is, transitioning to zero carbon is not a flipping a switch in the corner of a room. There's going to be a transition period, and there's going to be some intermediate steps. And Radical's whole goal, as you say, is to engage with stakeholders and ultimately understand what the right intermediate steps are. So what they do is they go in and meet with stakeholders, boards, and say, hey, here's a few things you could do to really, mitigate your carbon, whether that's natural solutions like buying in forests, or I would say synthetic solutions like buying in the carbon markets and offsetting some of your carbon emissions. So we're looking at it as an opportunity. We think it's the opportunity of our generation, and I think we're trying to be front-footed on it.
And BMO Capital Markets is a full-service financial services provider. Can you talk a bit about the services you offer and the type of work you typically do with REITs?
Yeah, no, happy to do it and appreciate the question. So thanks for that. Look, a couple things. We just completed one of the largest bank mergers in the United States in probably the last decade. So we're one of the few banks that's over $1 trillion in assets, one of the largest banks in North America. And I would say, something that sort of gets pushed to the side in frothy markets is counterparty risk, and we're one of the few banks with an A+ credit rating. So between our size and our credit rating, we feel pretty confident going into this market and being able to add value to the REIT sector. I would say with that breadth, it's a full service investment in corporate banking sitting in capital markets. So, we're a leading underwriter of equity in all formats, ATM, blocks, forwards, leading underwriter of bonds, certainly a large capital provider to the REIT sector, both in their unsecured facilities and a large commercial bank that does support some of our clients there, equity research, and further down the line in global markets, certainly swap activity, and to my earlier points on balance sheet management, really managing interest rate exposure, been doing a ton of business there in the last quarter or so, and then a full service ABS and CMBS business, which not all REITs take advantage of, but certainly in the office sector and data center sector, we're seeing that be a pretty topical component of their capital stack. So really a full service investment corporate bank with a large commercial bank behind us.